What do you make of this rally here so far? Is there a chance here that you think that this is something that is a re-rating, the beginning of one, or are we still talking about a bear market rally now?
Well, Dion and David, good to be here. I think we definitely think we caught the market at the right time, and looking at overall investor base, how they react to this rally, we definitely think there's more legs into this rally. So it needs fundamentals, earning to support along with policies, but overall, our clients are really driven by the long-only investors adding position, particularly for Hong Kong and then to that extent China as well.
Okay, so we have seen long-only investors come back in.
Yes, yes.
Okay, and to that extent, I'm not sure what data we have. To that extent, do you still think most global funds are still underweight?
Yes.
This market, yes. So correct. Do that correction
less
for
overweight,
us. Yeah.
I guess.
Yes, yes. We saw one of the lowest underweight. That was Q3 2022 post 20-party Congress, and Q1 that. Underweight have trimmed, but still way lower. It's negative, we say 2.3%. So that's a huge negative sort of underweight. So some of the leading long-only managers have already added some of the position, but still overall, global investor continue to underweight.
Are they still adding, because this has been really a tech-driven rally mostly, is it still the big growth companies where the money's going into, or are you starting to see that spread?
So we're seeing a healthy rotation. It started off for Hong Kong in particular, China counters more tech driven, and then it leads to insurance. So now it really spread out to broader banking and then in some of the property name as well. So we definitely see that healthy rotation. In onshore, we also have seen some of the what we call focus on quality growth.
But you're still preferring the Hong Kong market over onshore?
Between the two. I think just from a valuation perspective and then some of the liquidity signal, we're definitely seeing Hong Kong a little bit more in focus.
You mentioned about earnings. Consensus earnings, I believe, is still around 10% for this quarter. Is that still optimistic? Do you think they can actually deliver?
Well, actually, Q1 overall, was below consensus, but market continued to hold up quite well. So I would say our estimates are roughly around like 8%-ish. Q1 was a little bit below our expectation, but we definitely see that potentially could be the bottom. And given the lower base for Q2, we see some of the early momentum growth from here as well.
So the answer to the question, is this rally supported by earnings at this point, is what?
We're definitely looking forward to that, but we need to see Q2 data, along with continue those policy momentums, whether it's end of April signals on supporting through fiscal policies. We see government bonds being issued, and also property sectors. We've seen more and more cities relaxing the purchase. So a lot of those will need to combine along with the liquidities.